Welcome back to Stuff About Money They Didn't Teach You in School. I'm Xavier Angel, certified financial planner, and today I'm joined by Joe Hollier.
What's going on, bro?
How you doing today?
Good.
So welcome to Stuff About Money, Joe. It's a pleasure to have you today.
Thank you, buddy. Good to be here.
Joe's got 20 years of experience in the business. I think your anniversary is coming up, your 20th anniversary.
On Hurricane Katrina, pretty much. Yeah, I started right after Hurricane Katrina.
And that's
Great timing.
Great timing because a lot of people probably needed you.
Yeah, a lot of claims going on then.
You know, we are in hurricane season within the Gulf Coast, and this is something that everyone is asking. So that's our topic for today. But before we get started, I do have a question for you. What is one thing about money you wish you would have known 20 years ago?
Great question. Absolutely immediately go to saving it. I wish I would have saved more money as a younger guy and not spent on short-term gratification.
Short-term gratification. I love that, right? So, you know, even in the financial planning piece, what I hear people tell me now is they're spending today. They want that immediate gratification rather than saving. So, appreciate that. So, for all of you listening, definitely. Well, over the last several weeks, I've been having questions from individuals and clients regarding their insurance, actual cost value versus replacement cost value. So whether you are a homeowner, whether you're a hotel owner or a business owner, Joe specializes in working with property and casualty insurance. Tell us about the difference. What is the difference between actual cash value versus replacement cost value?
It's a great question. So going back to your comment about property, it doesn't matter what type of property you have. If you have insurance on that property, you're going to be faced with the concept of, am I going to cover this for what it costs to replace this and rebuild this property? Or am I going to write this for coverage that's going to take the replacement cost, but subtract depreciation? Now, this conversation is something very important to the financial implication it could have to your budget if you have any type of significant loss. So backtracking for a minute, replacement cost. What does it cost to rebuild your home if you lose your home? If there is a fire or a significant wind event and you have to rebuild a home that you had basically, what's it going to cost you? That's what replacement cost is. Full recovery, full indemnification.
And I got to imagine now, and I put it that way, from a financial standpoint, what it cost me to build my house today isn't what it cost me 5 years ago,
Absolutely.
isn't what it's going to cost me in another year or 2 years.
And another significant variable, I'm glad you brought that up. Think about the situation because we've been through a number of storms here on the Gulf Coast. What goes up immediately when there is mass losses or massive losses around this area?
Materials.
Cost of materials and the cost of labor. Labor stretched thin, the cost to rebuild stretched thin, or increasing by the day. Point is, if you're not prepared for that, and I'll tell you the reason, some of the pros and cons of actual cash value. Actual cash value can be cheaper on premium. So a lot of times it's an attractive component in a property quote. Folks will say, well, here I am spending $5,000 for this policy. If I write my building for a depreciated value instead of the full replacement cost value, I might save $2,000.
Wow.
And that money, that sounds like
Right.
pretty reasonable idea, right?
In a lot of my conversations, that's what's coming up is, you know, they're like, well, I want to do, you know, let me go replacement because I'm going to factor in a depreciation in there and I can lower my premium because my premium just went up from $8,000 to, I don't know, $15,000. And they want that cost savings.
They want the cost savings, but here's the concern. Here's the long term as a financial planner. How am I going to accommodate these expenses if I have actual cash value? If you have a significant loss and they depreciate, so let's use a real world example.
Okay.
Let's say you have a home that's worth $300,000 to rebuild it. If your house burned to the ground today, it cost you about $300,000 between, cost and materials and labor. You look at probably the national averages, $150 to $100, $170 a square foot to rebuild. So let's say you have a 2,000 square foot home, cost you $150 a square foot to rebuild it like it is currently. That's $300,000. Now let's say instead of going replacement cost on that, you chose to go actual cash value. Now you're insuring the property for, let's say, $220,000 after you factor in depreciation. $220,000 is going to put you in quite a bind if you have to rebuild a home and expect to have something similar to the quality of home you had prior to your loss.
Hmm. Right, and that's a significant difference.
Significant.
So the way to go then is definitely looking at the replacement cost value when you're
It is.
rewriting
It
your
is. And
insurance.
and it's unique for every person. You know, the
Mhm.
truth is you have to look at your budget. Being on the Gulf Coast like we are, premiums are significant. So more and more clients are opting for actual cash value to save the money on the
Mhm.
front end. But you have to make sure you crunching your numbers and you know if something big happens, you're probably not going to get back from the insurance company what you're going to need to fully either rebuild or replace significant damage. And that this formula transfers to a $50,000 claim all the way up to a full $300,000
Right.
claim, for an example.
And so we've been, in that example you gave, we talked about homeowners, but I have to imagine when you're working with some of your niche groups, which is the hotel industry, does it work the same way in the hotel industry?
Mhm.
Just bigger numbers in, correct?
There's bigger numbers then, yeah.
Okay.
So you're talking about insuring a property for 3 million when it should be insured for 4.9 million.
Okay.
And you can start to see how the dynamics play there, where okay, it's going to cost me 15% less
Mhm.
to insure it for 3 million. If there's a tornado that hits that building, you got big problems. You got a
Right.
lot of out of pocket. It's not just your deductible that's going to be so high. It's going to be getting something back similar to what you had prior.
So what are some things that as policyholders now, for those of us that aren't in the insurance industry and understand that, what should we be looking at right now?
You should be looking at two key things that could really have an impact on you long term. One is your deductible and making sure you're financially planning for that because that is a real number as we're heading into hurricane season, especially.
Mhm.
Um, that is a real cost that you're going to be hit with.
Okay.
Insurance, the way insurance is structured now, property insurance, it really is placing a lot of the financial responsibility on the homeowner for smaller claims. For wind deductibles could be anywhere from 2 to 5%, which a lot of times can be anywhere from $15,000 to $50,000 deductibles. You have to be prepared for that. Know what your deductible is. Know what your financial responsibility is there. So there is a direct relationship between deductibles and premium. So as you lower that deductible, that premium is going to increase. The other thing I would mention is making sure you know exactly what kind of loss settlement your property is set up for. Is it replacement cost? Is it actual cash value? Know the differences, but also know the price difference. Sometimes spending that little bit of extra money, and it may be a little bit more than a little bit of extra money, but sometimes in the long run, that's going to be a defining factor in whether you can rebuild the way you want to rebuild if you have a loss. Look, there's no guarantee we're going to get, out of hurricane season without a loss. We can't predict the kind of losses we're potentially going to see here in the next 10 years, but you have to know what the stakes are for your pocketbook if something significant happens and knowing that you're either insured to value or you're going to take a risk and insure it for less. Are you prepared to absorb that cost?
Right. That's all great information. I appreciate that
Sure.
because if we look at the span of your career, 20 years, right? We went through 2005 with Katrina, and then we had a couple more within that 3-year period between '05 and I think '08, '09, and then we had a lull. Then you come back over the last 5 years, and along the Gulf Coast, it's been an extremely active season. So
Mhm.
definitely, whether you're along the Gulf Coast, whether you're on the East Coast, West Coast, Midwest, we're starting to see these natural disasters all the time now. It's becoming a common occurrence. So these are things that I strongly urge you guys to sit down and take a look at. Review your policies. Get with your agents, your advisors, and make sure that what you currently have is in your best interest.
And let me tell you, if have time to share one more little
Mhm.
story, when I started right after Katrina in the business, there was an alarming shift in what was going on in the marketplace. And by that, I mean, all these folks had damages to their home. All these homeowners had issues, and businesses too, had major loss issues. Because there had not really been a significant storm like that before Katrina, a lot of these homeowner policies were just renewing year after year after year. So what I found was back then, even not knowing a whole lot at the time, is property owners would write their home for this value that was maybe subjective and they wrote it in the year 2000. that number, that coverage limit stayed the same. It wasn't adjusted for inflation. It wasn't, anticipating the cost of materials. And then what happened is when Katrina hit, so many folks were underinsured. And then that's when a lot of the rules changed, saying you please make sure you're insured for replacement costs. Because if you don't pay attention to it and years go by and you have a major claim, it's very likely you don't have the coverage limits you need.
All right. Any final thoughts, Joe?
Just stay diligent. Insurance is one of those things people don't like to look at, but all it takes is a 10-minute review. If you have questions, you can always contact me. But the thing is, know what you're getting into financially. A lot of times, you'll look at an insurance policy and think you have the coverage you need. You think the numbers add up, but it's really important to go over it and review it annually, just like you would anything else, so that you're making sure you know what you're getting into and prepared for.
Well, I appreciate this conversation, Joe, because
Thank
again,
you.
the time of year that we're in, I'm having these conversations more and more often now. People are asking me questions, and look, I'm great at what I do, but I know enough to be dangerous when it comes to the insurance. So appreciate your time,
Great to
Joe.
be here. It's an important topic. So glad you got to share.
Yeah.
All right.
All right.
Thank you.
Looking forward to having you again in the future because I know other questions are coming up.
Sounds
So,
good. Thank you, man.
all right.